Welcome back to CryptoZonZ. Peer-to-peer, trustless, permissionless, decentralized news gets you into CryptoZonZ. Caution, you may never want to get out. Bitcoin rocket fuel and how this is Bitcoin's time to shine. This episode is intended to give you a kind of a drill down expose on what's going on behind the scenes, what are the driving forces behind some of the most important effects that are taking place in the global economic, so that it will aid and assist you in being better informed into really what's going on, so that then therefore you can make better decisions how to proceed from here in your own, for your own family and for those around you. In this episode, we'll discuss basically the present global economic modus operandi of fractional reserve lending, or the only trick that central banks have up their sleeves, which is money printing, and how that just conversely is related, or how different and how black and white that is compared to a Bitcoin programmatic design, or it's an actual mathematical design, which really takes out the dynamics of a manipulated interest rate and a manipulated production of currencies into the system. So in doing so, we'll just mention one QE4 or QE infinity. We'll discuss how that will bring forth an increase in the cost of living, a lowering of the purchasing power, and an increase in prices or inflation. We'll show how we'll discuss how that'll increase the wealth and income gap, and how there really is no possibility of ever paying off this policy. What's going on is the money that's being printed is essentially borrowing from the future, so that our children and grandchildren will have to pay for that through their taxes. Number 5, we'll look at the Bretton Woods system, which was implemented in 1944, and how we're really closing in at the end of that. But getting back to the initial point of that, how there is just a black and white comparison between the present monetary policy system that the entire globe has adopted and the monetary policy of Bitcoin. QE4 is the monetary policy of just printing money. It's the only trick really that central banks have up their sleeve. And to the public at large, globally, in America as well, the vast majority of people really don't understand what that really means. Most of us, when we hear that we're going to get a stimulus check for $1,200 or another one for $1,200, that yay. Most of us don't really understand further. When we hear that they are going to implement a monetary stimulus, we just figure, oh, okay, that's how it's done. You're glad for that policy because it's going to be good for me. But actually, it's very clouded, and actually, in this prognosticator's opinion, it's not good for us at all. Mainly being that although we may be enriched to the tune of $1,200 now, and the Senate just approved another $3 trillion stimulus package on Friday, May 15th, which looks like many of us will get a $1,200 stimulus check again and more. Initially, yeah, you could say that's good, but the inherent design of that means in the long term that it will cause what I already alluded to before, a rise in prices. But even beneath all of the narrative, what is really going on is that it enriches a very few amount of people in the long term. The government is buying off an airline. They began last week, unbeknownst to probably 99.9% of America, the first time in history they're starting to purchase electronic traded funds, ETFs, which really, wow, it's not a good idea. I'm not going to go into the dynamics of that in this discussion, but there are things going on that we can find out about as we drill a little deeper, so that is the main purpose of this video. There's a Paul Tudor Jones is his name. He is a CIO of a very well-known hedge fund. He gained fame in the 1980s, but he oversees a $40 billion assets under management hedge fund. And he announced that he will begin to be investing in the low single digits into Bitcoin and Bitcoin futures. This is an epic moment because of the status that Paul Tudor Jones holds on Wall Street, and it signals a very real tipping point in Bitcoin's lifespan, truly, because now, I mean, with the hedge funds, when you think about hedge funds and family offices and other large private funds that are going on that are existent in the world. We're talking about the possibility of affecting $100 trillion industry. So Bitcoin has come a long way since its clandestine eventuation onto the internet, into the world on January 3rd, 2009. But the inflation will really lead, it's something that will not happen immediately. It takes a bit of time to manifest itself in the economy. So at first it doesn't, just the existence of more money and more checks is good, but it'll take months and maybe 6 months for some of the things to begin to rise in power. Like, for example, my favorite jar of honey used to be $3.99. Now, I want to say about 9 months ago it was $4.99. Well, I just picked it up yesterday for $5.99. So just yesterday it had gone up 20%. And that's just one itsy bitsy teeny weeny little example. But those types of things are going to be, we're going to be seeing that in our own personal pocketbooks. But the process of creating money like that really means that it's taxation that will be implemented into the future. I think that it's essentially disingenuous, because since now we're into the billions and into the trillions, there is really no possible way that all of this debt will be paid off. I'll mention right here or for your perusal, a link, or I'll put it in the show notes too, but there is a little bit of an example of what the Fed balance sheet is all about. And when they print money, it goes onto a balance sheet and it has to have assets on the other side to balance it out. And essentially what this is debt that's sold out to the future. It's debt that is sold outside of America into the bond market or people buying T-bills. And they are promised to be paid back, say, 10 years or 20 years or 40 years from now with a certain interest rate. And that is a whole other thing right now, is that the Fed's trick, or the only trick up their sleeve, is to print money and lower the interest rates. And we're essentially at a zero interest rate. This prognosticator thinks that there will absolutely be a negative interest rate that's going to be announced to bear onto the American economy soon enough. I want to begin to discuss how this all stands in the face of a programmatic design like Bitcoin. In its Genesis block, which happened in January of 2009, ever since then, for the next 4 years, up until 2012, with every block that was completed on the internet, the miner who solved that computational problem received a reward of 50 Bitcoins. And so what that means is Bitcoins are created into existence by expensive energy. So it essentially has value the moment that it's created. No one knew what was going to happen, if it would take place or if it would catch on or not. But even in Satoshi's white paper, Satoshi Nakamoto said, what if this thing takes off? Just what if? Why not invest a little bit into it? And those who purchased Bitcoins when they were 25 cents, wow, now they've had, well, the Bitcoin protocol and Bitcoin itself has been the highest performing asset in the history of mankind. It has been the highest performing asset in the world 8 of the last 10 years. It has increased in value 9 million %. Yes, that's what I said. 9 million %. So I have a question for you. Would you be interested in investing in a asset that is the highest performing asset of any asset on Earth during the decade of the 2010s? Okay, well, that's a good idea. I mean, good grief. So that's what Paul Tudor Jones has done. He's beginning to invest into hedge fund and recommending that to his investors to go long on Bitcoin and its development. And to further explain the mathematical design of Bitcoin, will show how that is very, very sustainable. You fast forward to 2012, it was the first, what they call halving, where every block that was produced, the miners received a reward that was cut in half to 25 Bitcoins per block, excuse me. And at that point, in 2012, the mining reward was reduced to 25, and the price of Bitcoins at that time was $12.31. So Bitcoin achieved dollar parity, and actually much more than that, because it was worth over $12 for every Bitcoin. Fast forward again another 4 years to 2016, and there was the second Bitcoin halving, And the mining reward was cut in half according to Bitcoin's programmatic design to 12.5 Bitcoins produced every block that was mined by the miners. At that point, Bitcoins were $650 per Bitcoin, so it achieved gold parity, almost the price of an ounce of gold. And very soon after, it went far beyond what the price of an ounce of gold was. Fast forward again to Monday, May 11th at 3:30 p.m. Eastern Standard Time was the third halving in Bitcoin's history, a programmatic halving of the production of Bitcoins that are produced out into the market every 10 minutes. It was reduced to 6.25 Bitcoins per 10 minutes. And at that point, the price per Bitcoin was at 8,590 and has since eclipsed 10,000 within the week. And the next halving will be in, well, let me back up. At that point, back up to 2016 because of it began to be able to be called an asset. We saw between the second and the third halving, between 2016 and 2020, the onset of markets in the futures. On Wall Street, investors were able to invest long or short on the price of Bitcoin. There was a company that was launched called Bakkt, B-A-K-K-T, by the owner of ICE, who is also the owner of the New York Stock Exchange. So we're not talking small beans here. We're talking really getting into discussions of importance in all four corners of the world since 2016 and up to 2020. In other words, during that course event between the second and third halving. Also during that time, it just began to grow in stature. There was many other cryptocurrencies or altcoins, you could say, that were implemented with different use cases. But in 2020, with Bitcoin's price being at the third halving 8,590 and now about 10,000, it is truly becoming into what can be called a nation state status. There's a couple of nations, one in particular is Iran, who's been forced out of a lot of monetary collaboration or monetary participation globally through sanctions. Now they are looking seriously and have been investing in Bitcoin itself, and early investors in Bitcoin, and really right now it is pretty early, and that's why I say at the onset of this video, that's one reason why it still is one of the dynamics which add to its probable and likely price increase and exponential price gain or valuation. But Iran in particular, when we've got even nation states investing largely into Bitcoins, they stand to have massive gains, which will, of course, bode well for their national liquidity, backing up any currencies that they would produce for their particular country or citizens. Bulgaria, for example, I think it was back in 2017, they had a store or a stash of Bitcoins that at 2017 actually was greater than the amount that they had in gold in that country. And that was the first time that we ever saw any nation have more value in Bitcoin than they did in gold. So in the 2020 halving, since then and going forward, we're going to see the possibility of it being linked or pegged to actual nation state currencies. It's an absolute possibility. Now there's other things going on globally with digital currencies, or what they call central bank digital currencies, one being, I think at the forefront is DCEP, DCEP by China, which they've been saying is going to be coming out any time. But now with this epic event in the health history of the world, I think that has delayed things a little bit. But it is a very difficult and very laborious, hourly laborious. It's very involved just to develop code. You have to have the right people, the right smart people to do it and to debug it and to recalculate, to just really make this possible. So it's something that Bitcoin has already achieved. And with one thing I want to mention here about Bitcoin and its programmatic design is it is essentially unhackable. For it to be hacked, well, it is because of the design of using miners, what this does is it securitizes the blockchain. It securitizes the Bitcoin software in its life on the blockchain, which is on the internet, by verifying transactions. And it's a network. And by network, what I mean is there's literally millions of different miners, little miners or computers that are vying for this reward that is designed into the system to be rewarded every 10 minutes. And what this essentially does is it verifies and establishes, it creates a modus operandi of virility and viability on the internet, which just adds value. For Bitcoin to be hacked, it's got to be hacked within a 10-minute period. To explain that further, every 10 minutes that goes by, Bitcoin is more and more impossible to hack, because in order to hack the Bitcoin protocol, you have to have all of the transactions that are existent on every 10-minute block going back to January 3rd, 2009. So it is the most powerful computer network in the world. If you were to shut down the computer network within a certain country, for example, it would do absolutely nothing to the viability of Bitcoin as a protocol globally. So, and even if there was such a thing as being, able to shut off the switch, well, that also wouldn't demolish or kill the viability of Bitcoin. It can and is existing through ham and radio waves and by use of satellite technology. So this is an unstoppable technology, and more people and government officials and peoples at the levers of power are realizing this, and then therefore that gives the advisors or the cabinet members, if you will, of particular nation states who are considering this reason for having good reasons for looking at it as a great backing for its own currency. So it begs the question, what's going to happen by 2024, which is the next halving? The rate of Bitcoins produced will be reduced to 3.125 Bitcoins every 10 minutes. And this prognosticator thinks that the price of Bitcoin by 2024 will be between $150,000 and $250,000 per Bitcoin. It could be 4 times that. No one knows. Absolutely no one knows. It could go to zero. And I say that because for any of us who are considering investing in it, we've got to realize that we don't invest in it with our rent money, our insurance money, our food money. We invest into it only if we can afford to lose what we invest, because no one knows. It could very possibly go to zero. There's no guarantees. By the same token, the dollar could go to zero. Now, will that happen soon? No, I don't think so. But with 1944, there was the Bretton Woods system that was implemented. This was a meeting of 44 different nations in Connecticut, I believe it was, in Bretton Woods. And they hammered out an agreement over the course of about 20 days, I think it was, 21 days. And they decided that the dollar will be the world reserve currency through which most of the world will balance their books. And it afforded America something very elegant, which is known as seigniorage. It's spelled Seigniorage, seigniorage. And what that means is they get a slight premium on every single transaction. So it really affords them the ability to buy products at a lesser rate. It allowed us a way of being kings in the culture, if you will. But with more and more dollars, and the way that dollars are produced, they're not produced out into greenbacks. Actually, they're trying to eliminate that and get everything to be digitized. But with the way that the dollars are actually primarily introduced into the system is through the banking system, which up until very, very recently, and I do mean within the last probably 8 or 10 weeks, I think, a bank had to have on their balance books, for every $1 million, they could have the right to lend out 10 million. So they had a 9-to-1 ratio there. They could lend out 9 million and the 1 million that they had. So they were able to get interest from 9 million that they literally have no existence of. And when the member banks of the Federal Reserve are given the green light to go ahead and borrow, that is how money is produced out into the American government. And essentially every single bank, except for 3 nations now in the world, has implemented the same monetary policy. And it has caused or enabled America to build great infrastructure and buildings and highways, health systems, education systems, other things. But at the same time, it was able to do that without paying for it first, essentially. So this is being paid for through debt. And that in itself is a kind of befuddling theory or reality, if you will, how debt can have value, but it does. The Bitcoin system is an asset-based technology, meaning there is no debt. And with its design that there is no, well, in 2020, just less than a week ago, with the reward, the mining reward being reduced to 6.25 Bitcoins every 10 minutes, the interest rate for Bitcoins is presently at about 1.88% per annum. It is now the least inflating currency in the history of mankind. And in 2024, at the next halving, it'll go down below 1%. And that is just one very fundamental, basic, dynamic and feature and characteristic of Bitcoin, which bodes well for any citizen, any nation, or any entity which would consider it as a backing for its value or its currency. So that's kind of it as a nutshell. There's just no two ways about it for the near future. Bitcoin's price will go exponential from here to 2024. I hope that you've gained some value from this. Any comments I welcome, whether they're positive or negative, absolutely. We'll link in the show notes some pertinent articles. I appreciate your attention and time. Please click on the green planet there. I will very much appreciate it. Hashtag love all, serve others. I wish you well. I wish you wealth. I wish you health. And until next time, peace.